Yeah, that's right. A 20% decline is a big number. I think the market is clearly disappointed by this. But to put things into perspective, I think we've been talking about a global growth slowdown and a China slowdown for a long time now. So it's not completely unexpected to see a negative number. We've had the Sino-U.S. trade tariffs in the background. So there are a lot of headwinds. There's a lot of moving parts in the market. But at Eastspring Investments, we still are very bullish on China. Our long-term outlook is constructive. And there's lots of ways to play China. It isn't necessarily through the exporters. At Eastspring, we're very focused on domestic China consumption. We're looking at in addition to the consumer names, things like banks and insurers, because the domestic economy is a hugely growing and large part of the market, and there's plenty of opportunity there.
A 20% decline in exports over 1 month. What does that tell you about the trajectory for growth over 2019, though? Because we do know that officials have been out this week saying growth is going to be lower, between 6 to 6.5%. Does it make you then suspect that growth may come in on the lower end of that assumption, closer to 6%, perhaps, rather than 6.5%?
Maybe so. I think we do need to be prepared for lower growth out of China. I mean, it's still growing at 6% plus, so let's keep that in the back of our minds. It's still a very healthy growth profile compared to other parts of the world. But yes, I think we should certainly be positioned and prepared for slower growth out of China going forward.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.